Hey, good morning, everybody. This is Dan with Theta Trend. Today is Tuesday, July 1st, 2014. It's just about 5:30 a.m. here, Mountain Time, so 2 hours or so before the market opens. And what I'd like to do today is take a look at the SPX and try to show you what I'm looking at for the weekly Theta trades, so the weekly options trades. Right now, what we're looking at is a daily chart of the SPX, and on this daily chart, I have the 3.5 times average true range trailing stop. That's that pink dotted line here when we're in a short state, and the green dotted line when we're in a long state. So what we saw yesterday is SPX closed right around 1960, and that close is really close to the standard deviation offset, which is sitting at basically 1959 or so. So this week what I'm willing to do is I'm going to take a little bit more risk, and I'm going to take a trade even if it's slightly outside of that standard deviation offset. It's pretty close, and I'm just going to be managing it based on the open P&L risk. So let's drill down time here a little bit and just see what I'm looking at. So what we're looking at now is a 65-minute chart of the SPX. So each one of these candles represents 65 minutes. The yellow line is approximately the 5-day moving average, the gray line is approximately the 10, and the green is approximately the 20. So last week, if you remember, we had these two sharp intraday sell-offs. They came down, they sort of went into this area that I said, is an area of potential support, kind of tested it. This low actually slightly undercut this low, and price traded higher from there. So this morning, let's go back over here and take a look at something real fast. This morning, it looks like the futures are trading up 4.5 points. So let's just keep that in mind. I didn't mean to do that. Let's see here. So the futures are up about 4.5 points. That would put the SPX somewhere in the neighborhood of 1964, 1965, and so that's kind of right in here somewhere. So right around yesterday's highs. What I do see is I see what is potentially a lower high in here right off of the 10-day moving average. If we get up and above this, and especially if we get up and above the 1966 to 1968 level, we're at new all-time highs, and I think the trend's going to continue. So that's one of the reasons that I'm sort of willing to disregard the standard deviation offset this week, because price is pretty close. This, the offset we said is at 59, so it's right here. So we're within a couple of points of it. We're not really extremely overextended. But let's go over and take a look at a couple of potential verticals. So what I've done here is I'm looking at three different trades. One is the 1900, and we'll just refer to these by where the short option is in the vertical. So the 1900, the 1905, and the 1910. And we can kind of see the range here. The 1900 is trading for 35 cents. And really what I'd like to be able to sell that for 45 cents. For some reason, I'm not clicking on it, though. There we go. So let's just take a look at that potential scenario. So in order to sell that for 45 cents, I would need price to trade down about 5 points to 1955. Okay? If we go back over to the 65-minute chart and take a look at where 1955 is, we're coming back down to somewhere around that 10-day moving average. It's also this prior high, which makes it, potential area of support. So it's somewhere down in here. Or wait, I've gone a little bit too far. So it's right in here. The likelihood, I think, of price getting there today is relatively low unless we get some sort of a deeper pullback. So if we were to violate this low or something, or come down to test this low, then maybe we'd see price down in there. But I'm not real confident that it's going to happen. The other thing I might note is that I'm taking a look at these trades a couple days in advance. Right now, these have 10 days to expiration. And the reason I'm front-running it a little bit here, as opposed to 8 days, say, is that we have a shortened week and the holiday weekend. And so I'm just trying to get ahead a little bit of that weekend decay. So let's take a look now at the 1905. The 1905 would be okay as well. Maybe we could take that one at 45, say. And so in order to get filled on that, we're talking about 1957.87, 1958 basically. And if you recall, that would actually be within the risk parameters and just inside of the standard deviation offset. So if we come back over here, we're talking about something right around in this level. And it's certainly possible that we'd see price trade down into there, test this as a support area, and then hopefully head higher. But we'll see what happens. You never know. The last option we have here is the 1910 vertical. And this guy's trading for about 45 cents right now. And this is slightly higher than a 10 delta. I think it's an 11. Oh no, it's actually a 12. So this is sort of the closest to the money of the three, not even sort of, it is. And if we wanted to sell that, say for 50 cents, we'd be looking also at a pullback down to around 1950. And so I think what's most likely going to happen today is I'm going to get filled, or tomorrow morning, depending on what happens with price this morning, get filled on the 1905 or the 1910. If you remember last week, I had a spread at the 1910, 1900 for 45 cents, and that was closed out yesterday, Monday, for 10-cent debit. So we pulled $35 out of that. But that's what I'm looking at this morning. So just keep an eye on Twitter. I'll try to put out the trades that I'm looking at, and I hope that helps. Have a great day.